All right, folks, welcome. It is I don't know what day it is. It's the 21st of January. And every month we try to have uh, a lending partner come on. And we are fortunate enough to have a pair of fantastic lenders, mortgage brokers in the office, and they are part of the team. So I would like to introduce Miss Emily Flowers. And she's going to spend the next 2 hours with you guys discussing lending, the different types of loans, marketing opportunities, just all kinds of stuff that Emily is really, really good at. And if you ever have a question, again, she's right there in the office. Her husband, Steve, he's not as much fun as she is. And I hope he's watching this. Um,
Not.
but
They went to breakfast.
reach out to them for any question you may have. I know Emily's going to give you her phone number. Don't hesitate because she's there to help and wants to help and wants to make you successful. So without further ado, Miss Emily Flowers.
Thank you, Barry. I appreciate that. Barry's right. My husband, Steve, and I sit in the office. Steve has 26 years of experience in the mortgage biz. I partnered with him 6 years ago. He was in need of a trusted business partner. And who does he trust more than his wife? No one. So here you go. So officially empty nesters. I am in Key West at the moment, but I'm happy to be working with all of you today. Our assistant is with us too, and she also sits in the office. Her name is Kathy. She is licensed as well. So if you pop in, wear your mask for her because she's a previous cancer survivor and things like that. So she might want you to talk to her through a mask, but she knows everything and she makes our world go round. So if you guys have questions during this presentation, please just jump in, or maybe Barry can help me with the chat, something like that, whatever you prefer. So I'm just going to use the slideshow that I helped make with my marketing department. So our marketing department, our headquarters, we're a local St. Louis company. Our headquarters is 270 in Olive. That is where we print as well all of our marketing materials. You will not find them cheaper or more RESPA compliant than us. So they only charge you for what you're doing on the documents that you're printing. Anything else they'll do it for free if it's a social media post or something like that, as long as we are co-branded. So benefits of working with the Flowers team, you have both of us. So if you can't reach one of us, or one of us is doing a training like this, you can always reach the other. Plus we have Kathy, and we also have our own processor as well. We will always answer our phone, or at least text you back and let you know when we're able to talk. So it's good. You want that communication. We have lots and lots and lots of milestones in place for both your borrowers and you during the loan process as well, so that you know what's going on. Communication is key. So I guess we'll go through marketing first, since it's up here on the slide first. We have a mobile app for you. You won't use it instead of your Keller Williams app, but you will use it alongside. It's a great way to refer clients and communicate. We can keep them together. You'll know what milestone they're at in there. They can do calculations through there, or you can for your clients. Rick needed a quick calculation the other day, and I wasn't able to do it. And he just got on the app and made the calculation and sent it to the borrower very quickly, within 2 minutes. You can also upload documents and things like that through the app as well. So, and clients can chat with me through the app. There's a lot of things that it can do. It also, we make it look like yours, and we put your logo and stuff up at the top. we also have list reports, and we have Total Expert, and we have materials upon materials. I have a marketing degree, so I think very creatively, but I'm also finance, and so I work with you to create budgets and create schedules for your marketing so that you're getting the most bang for your buck, right, Barry? Mm-hmm. Oh,
Sorry, I'm on mute. Yes.
no, you're fine. Yeah, Barry and I have done a lot with that. So where we get his marketing schedule together, and his budget and everything, and do it together. So our branch owner has all of this available to you, the real estate mastery, tons of resources for you to grow your business. And Steve and I help with that too. So Jeff does workshops too, my branch manager, my branch owner. So we can always have you either jump in on one, or we can create those for you as a group, Barry. These are the big printers that are out at 270 and Olive that make all the print marketing come through, and they are beautiful. Barry knows. Barry, you can always see what Barry has done as well, and cheap. So door hangers, EDDMs, every door direct mail. We can, show you how to do that. That's a cheap and easy way to market yourself. Here's some of the other tools that we have available to us, and we pay for you. That's the app. And we do single property sites through Total Expert and List Reports. So you'll always have a website for your listings, or for a listing you'll be marketing. So it doesn't have to be yours. It can be one you're going to be sitting at an open house or something. Okay. Everybody fairly, I would make one-on-one appointments with me if you want to talk about marketing. We can make sure that it's customized for you.
Yeah, and let me jump in on Emily's right here. And I let her go through this little piece, but I'm going to tell you, when I first started with Keller, I had come out of a company that we spent a bunch of money marketing, and I showed Emily what we had done. I gave her some of my thoughts. We sat down, we built a customized marketing program for me. I co-brand with Emily. And what we do is we'll send it. I was just looking to see if I could find them. We do every door direct mail. And I'll tell you guys, I farm the living crap out of neighborhoods. Um, and when I say farm, what we do is I get with her, we build a cool template, we build some cool mailers, and I take them to the post office. What happens is you pay for them, and then their office over in St. Louis prints them. You can either pick them up in St. Louis, or they'll deliver them via FedEx to the office, and then you go pick them up. And then all you do is you take them to the post office and you drop them off. It's already prepaid. You sign a piece of paper, and the next day they go out to every house in a neighborhood, on a mail route, actually. So you're going to get 600, right? Because that's typically what a mail route is about 600 houses. And it's not expensive. I think they run about 17 cents a piece, 17 or about 30 cents a piece. I take that back. And you can just pummel a neighborhood with your postcard and your face and your ideas, especially if you're doing an open house or a just listed, or a, hey, work with me. And I will tell you, it is extremely successful. And I think Emily probably talks about this later. I have had some great success using those postcards. People actually bring those postcards and go, hey, this is you. I'm like, yeah, well, no kidding, it's me. Because my big ugly mug's on the middle of that thing. But yes, sit down with her, figure out a marketing plan, and it's not expensive, right? You're thinking it's thousands and thousands of dollars. It's not. It's a couple $100. And every time that I do one of my listings, there's a couple sets of mailers that go out for my listing. The other thing we were able to do is build door hangers, right? In the world right now of COVID, uh, we don't do a lot of door knocking, but I have, what, 500 or 1,000 door hangers ready to go, because I had them built, and they just have my face on them, and they have some information. They have M stuff on it. And so if I get a couple hours in the afternoon, man, I'm walking down a neighborhood, right? and I'm putting them on doorknobs so that people in a neighborhood know that I'm there and I'm active, and it's just another touch. It's another way that people recognize you. So do it. All right, Em. Sorry.
Nope. No, thank you. I appreciate that. The door hangers are, what, 11, $8 to $11 for 100. I think his 600 mailers were less than $150. It was something like that. I can't remember, but that's about what he spends, just so you know. Let's move on to loan products. I'm assuming everybody's fairly new, so we don't know a ton about mortgage loans and how to make your deals come together with the guidelines of the loan and what your clients want and what they qualify for. So let's kind of talk about it. We offer a full spectrum of services because we're a lender, we're not a banker. So we tend to be a little less conservative, a little more creative. But there's things that we don't do. So we typically work with some banks and will refer if we cannot do it. So there's some that play nicer than others, and we've had some very good experiences with them. So pretty much everything you can think of. Let's go conventional first. So conventional loans. You do not need 20% down on a conventional loan. Do not. You can go anywhere from 5% to 20% on a traditional conventional loan. Now, there's another program that the Fannie and Freddie, which are the conventional lenders, they have a 3% down program as well. So we can talk about that. But max loan amount just went up. I'm going to have to change that. I think it's above 510, 400 now. Must be owner occupied, second home or investment properties. So this is the only program that you'll be able to use for investment properties, just so you know. You can use gift funds, or the borrower can use gift funds, not just their own monies. So sometimes they have, 3%, but they need another 2%, and they can get that from a blood relative. So max seller concessions. Typically on a traditional conventional home, it's going to be 3% of seller paid closing costs. So that's the purchase price times 3% is the max seller contribution that you're allowed. Okay. Only warrantable condos. We just had somebody's condo at the very end, and it was a non-warrantable condo. We couldn't do it. So we sent it to a bank, and they decided that that was what they wanted to do. 1 to 4 units. You will pay private mortgage insurance, PMI, on anything under that 20% down. Okay, so at 80%, it will fall off. But if you're not putting down 20%, you will pay PMI for a portion of the time that you are in that loan. Now, there are options there. So say somebody wants to put 5% down, but they don't want to pay PMI. You can do a couple of different things. And banks typically don't have this option, but we do, where the borrower can either buy it outright and not, just do a lump sum, or we can take a premium on the rate and we can buy it for them, lender paid. Okay. So credit score as low as 620. Well, if down payment and no PMI, 680 if not. I was going to say, yeah, 680 is where conventional begins. 740 is considered top tier. So that means that anything over basically 740, that's just gravy. So you're going to get the best rate with a 740. And then the max debt to income is typically 45%. 5% on conventional, but when we run the automated underwriting system, when we pre-qualify people, which that's what every lender has to do, is run their automated underwriting system, sometimes it lets us go almost up to 50%. It kind of depends upon if the automated underwriting system likes what it sees, likes what it sees on the credit, likes what it sees on assets, likes what it sees on income, things like that. Okay. Any questions on conventional loans? Okay. Renovation loans, there's conventional and there is FHA, and yes, we have both. This is a loan program for a very specific individual. It seems like it's a great idea until it's not. So whether it's the FHA 203K or it's the conventional home style, you are talking about getting the government involved in what you are going to do to improve your house. So most of the time when I am quoting this for somebody, the fees and the rate and all the things that go with it, it's like a full-time job. It kind of scares the majority of people off. So again, it has to be a very specific borrower that's going to be using this program. And no, they're not just going to give you the money to go make the changes yourself. That's not how renovation programs work. And no, you're not doing the work yourself ever. You have to get 3 bids, they have to be licensed, all of that. So if you ever want to talk about that, I do have some materials that you can actually read through, and I can show you what the process looks like. If this is something that you think you really want to learn more about, then we can even get our renovation department on a call with us, a Zoom call, and they can go through the whole process with you if this is something that you are really interested in. But it's quite, we actually have a teammate that we use to do those because the process is daunting, and we need somebody else to pay closer attention to it. So we have somebody else so they don't eat up our processing and our assistant as well. So, but we stay in the process with that teammate. FHA, I guess it used to be known as the first-time home buyer loan, but it's not. It's not a first-time home buyer loan. It's common for first-time home buyers to use this loan, though. You can't have owned a home within 3 years. So that's, I guess, why they consider that. It has to be a primary residence. It's a 3.5% down. That's the minimum investment required. They don't have income or address restrictions where you're going to see some of these lower down payment programs like the conventional 3% program. It has income restrictions based on the median area average and stuff like that. So a lot of people make too much money to use it. FHA loans, you don't. They're not worried about it. They allow for 6% in seller paid contributions, which is great because you can do wonders with up to 6%. And you don't have to worry. Like if they've already given you $3,000 for seller paid closing costs, and then all of a sudden something on the inspection needs to be negotiated and they're going to give you a little more money, and don't write in lieu of on your contract because that won't work either. But it'll kind of absorb it, where on a conventional one, you have to make sure you make that calculation properly. Sometimes you have to mess with the purchase price. Can be used for condos or PUDs or multi-unit properties, things like that. You can have non-occupying co-borrowers So co-signers on this program. So, and typically, we will use those. Has to meet HUD minimum standards. So your appraisal will have to reflect that they're okay with it. It's a slightly stricter than your conventional appraisal, but not as much as everybody thinks. So it does have MI for the life of the loan. So you are always going to pay mortgage insurance premium on this loan for as long as you have it. It does have upfront MI as well, but that goes into your loan amount. You don't pay that outright out of pocket. The max loan amount could be 331, 760, but it may have gone up too. Credit scores as low as 620. Right now during COVID, our credit score minimums have raised. So we used to be able to go down to 580. And it's 620. So 600s are super hard to do. 620s are kind of hard to do. But we do have a rapid rescore program so that if we do evaluate your credit and it can be raised a few points quickly by paying something down or off, we can get that done in 3 to 5 days and continue on with the process. So if they need to make that 620 or we need to raise it to get to a different rate, we can do that. And they do allow debt to income over 50%. But again, the automated underwriting system lets us know exactly how high it'll let us go. I mean, I've seen it as high as almost 58%. So, but it really depends upon what it likes. Anybody have any questions about FHA? Does anybody know, do you know what questions to ask? Maybe that's a better question.
All right, guys, you got to talk. Emily's here. Come on, Jen. You always got one. Fire it up.
No?
I don't have any questions right now. I'm writing down what each kind of loan is.
Yeah, that's a big deal for everybody to understand. And I will jump in and I'll ask a question here in a second. But
so far I'm understanding everything that Emily's going over.
Yeah, when you look on the MLS, make sure when you're looking at a house, you know how down at the bottom on the second page it talks about what kind of financing is available for that home.
Yep.
Make sure you look at that, and then you have to match the loan that your buyer has with what's on the MLS. Now, there are a lot of agents out there that will just throw conventional FHA, VA, whatever, because they don't understand this, right? So if you're listing properties, make sure you understand the requirements for each type of loan so that your house gets it, so that you don't end up failing on a home.
Yeah. Like my listing, I put conventional or cash, which my client is paying cash.
Yep. Yeah, cash sales are awesome, but yeah, just know that when you're looking at a property and I mean, I wish I could tell you there's a cut and dry way to figure it out. And there is. I'm just not. I'll be honest. I've been doing this for a day or two, and I still look at houses and go, I'm not sure. If you have that question, there's a phone call you make, and it's call Emily, and you give her a basic rundown of what it is, and she'll tell you what it is. She'll say, yeah, that one will be that we can try that FHA, or yeah, we can try that VA, but she'll also warn you of some of the issues. And that was my question. Em, can you kind of hit real quick a couple of the glaring things on FHA and VA that people go, ooh, I probably shouldn't try that?
Sure. And some, I will say on the MLS, some people will just do conventional because they don't want to worry about the borrower. And FHA is a super great standard for a lot of people. So I don't know why people discount FHA so much. It's an amazing program, as well as VA, as well as USDA. So FHA, Appraisals, things that get called out are peeling and chipping paint. They will not allow any of it. So you will, even if it's on a shed that somebody plans to tear down, you're either going to have to tear down the shed or you're going to have to scrape and repaint the entire shed because they will not allow for that. VA is super worried about safety. So for them and FHA, and they're all about the same, you know, any handrails and things that are like missing, or if they're the spindles are too far apart, things like that, you're gonna have to make sure that everything is kind of safe and secure. USD, always GFIs. So you have to have GFI outlets near water. So right off the bat, if you see that, that's going to have to get repaired. It's a simple fix. But if you're going through a house and you're about to list it and you notice it, just do it right away. That has to happen.
So can I ask a question real quick? So a conventional loan doesn't have these guidelines. You're talking FHA and VA.
They're looser.
Okay.
Is looser with it.
Okay.
FHA, any government loan program, FHA, VA, USDA, they're going to be looking for the things that I just mentioned, the GFIs, the painting and scraping of paint, or the peeling paint, and safety.
Okay.
So, I mean, if something's glaringly obvious, the conventional underwriter is going to pick it up too.
Yeah.
Yeah, it's just a make sense sort of thing. But a lot of people don't understand that if there's a couple of things that a lot of people don't understand. One is the whole shed thing, or a garage, or any of that has that peeling paint. They're like, oh, this isn't even part of the house. It's not even necessary. No, it doesn't matter. If it has anything on that property has peeling paint, it's got to be scraped and painted or torn down. One of the two. I had somebody selling a like Section 8 housing fourplex or something like that, and they were like, well, we priced it like a turd because it is. And I'm like, well, and I don't know how many of you have read appraisals, which you should if you can, but there is a condition number attached to every single appraisal. So it's C1 through 5. So C1 is new construction, C2, so on and so forth. C5, no one will lend on. The investors will not buy it. So you have to improve its condition to at least a C4 in order to get somebody to lend on it. And then you have to see if you've locked it with that investor, or you have to change investors, because some don't lend on even C4s. So there's so many nuances that we have to be careful of. But the condition of the home, if there's holes in the walls, or part of the carpet's ripped up, or holes in the door, fix it. It's not going to pass. So you can't price it like a turd, because it still won't, get picked up by the investor.
And you guys wonder where I got that phrase from.
I think I've told the story before. Yeah, Jennifer?
So what about people who are selling their homes as is? Like, what are they asking? I mean, what kind of loan can somebody get if sellers are, refusing to fix anything, refusing to put any work into it? If the lister.
Mm-hmm. If it's called out by an appraiser, it has to be fixed either A, before closing by whomever. The buyer can choose to pay to have it fixed. That's an option if the seller won't. Or B, you can, I think it's up to $5,000. You can put it in an escrow holdback. So as long as there's bids and stuff like that, the title company will hold 150% of the repair back. And then it has to be completed within, I don't know, 7 to 10 days after close. So you actually get to close, but then the repairs have to be done, and then they'll pay out whoever they need to, and then give the rest of the money back, whatever's left over, to whomever put up the money, whether it was the seller or the borrower. So I answered your question, but I didn't answer your question. So as is, when it comes to a loan situation, there is no such thing as is. If the appraiser calls it out, it's got to be done.
Chris had a question as well.
Yes, sir.
So would it be best to just use the FHA and the VHA for only new home purchases?
Oh, no. It's not as scary as it sounds. It isn't. They're great loan programs. They're easy to use, and they're seller friendly. It's just once you kind of start seeing the little things, you'll know. I mean, replacing a GFI, how much is that, Barry? Couple bucks?
$15. $15 if you do it yourself.
Okay. You know, and scraping some paint off and, you know, repainting it takes a couple hours. It doesn't have to be the best job in the world, especially if you're going to tear it down. It just is a hassle. It just has to be done. And
Yeah,
it can be did in a day by anyone.
I'll tell you guys, a lot of the houses that you're going to look at have vinyl siding on them, so you don't have to worry about the paint. The GFI's city code requires it, so it's not out of left field. A lot of the things that these home loan criteria are based on is safety and security of the home.
Yeah.
One of the things we'll tell you, and I think we told you the other day, is like handrails, right? You'll see shaky handrails. Well, it's just a safety thing, and it's a screw tightened up, no problem. A home inspector is going to be your biggest ally when you're getting ready for a home.
Agreed.
And that's why I can't stress enough, when we have the home inspector on here, a lot of these questions you can ask them as well. But that home inspector is going to point out a bunch of stuff. Now, don't let them tell you this will not meet a VA because of it, because they're not experts.
They're not.
However, they do know enough that just like after you've been a realtor for a couple, 3 years, you're going to be like, yeah, I don't know if that's really going to meet criteria. Let me ask the expert. They'll identify problems. And most of those problems get fixed really easily. And most homeowners understand that. And they're like, yep, I probably need to get this fixed because it's not going to meet a criteria. The interesting part you're going to run into is you're going to have a home buyer who thinks they're an expert in VA. Or FHA or whatever the case is. And they're not experts because they call it a VA inspection or an FHA inspection. Remember we talked about that. There is no such thing. It's an appraisal,
Right.
not an inspection. So just some terms to keep in mind, and you're going to figure it out because you're smart and you have a whole network of people there to help you through any circumstance. I hope that helps.
Yeah, it's not quite as scary as it seems, but it's FHA is an awesome program. We use it all the time. Rarely is there something wrong that you have to majorly fix. It's very rare. So don't be scared by it at all, please, because it's a solid loan program. And it helps out a lot of people with that little bitty down payment and everything. Any other questions? Getting an appraiser on might not be a bad idea.
Yeah, that's a good call.
Yeah. And they have a renovation product too. So again, you want to learn more about renovation, let's let's get the renovation department on and do a whole presentation that way. USDA, I am closing one of these today. No, tomorrow, sorry. USDA, awesome program, 0% down. It's a true 100% financing loan. Owner occupied and primary only. They get a little picky about pretty much everything, but the right borrower, it's a great program. So it has to be a USDA eligible address, and they have income limits. That can all be found by Googling USDA eligible property, and then save that as a favorite on your search bar, because it's you stick in the whole address and it clearly says yep or nope. It's it's super easy to use. That max loan amount might be more now. You typically don't run into it with USDA around here. 620 credit score or above. Again, we're trying to shoot everybody for that 640 range if we can. It just makes life a lot easier. We're not doing manual underwriting, things like that. So that's our job though, so you don't have to worry about that. Maximum seller concession, again, is that 6%. So you got a lot of room to play with. Closing costs, just so you guys know, in our area, cost, it's about $2,500 to $3,000. That's it. So and it doesn't matter how much the house is. I know that there's like this 1% rule and this and that and all that, but in our area, with any title company that's not also an attorney, like if you're doing an attorney title company or adding an attorney to it, you're just doing your benchmark or your First American or whatever, they're going to be about 2,500 for the most part. Sometimes they go up to 3,000, just depends upon if you have to have extra inspection, appraisal, and things like that. Okay. Gift funds are allowed. So, and you can do them on condos, but not investment properties or anything like that. They have their appraisals are similar to FHA's. They're just, they're kind of looking out for safety. They're kind of looking out for things like that. 43 max DTI. That is set in stone. It cannot be 43.1. It's got to be 43 or under. They do have mortgage insurance on the loan, but it is nothing. It's like between 20 and 40 bucks. Usually it's nothing. You cannot own another property. If you're trying to move from one property to another and you haven't sold the first one, you have to follow their guidelines, and they're goofy. It's like they have people living in like bathrooms and kitchens and all kinds of stuff. Like you have to have outgrown the house by, what was that show where they had like 21 kids or whatever? So you got to be like that, and everybody living in the, kitchen or something. The thing about USDA loans, give those a little extra time on your contracts. So it gets underwritten by us and basically cleared to close. And then we send it to USDA to be underwritten. And we are at their mercy. Once it gets there, we're at their mercy. Now, we do look at their turn times every day, but like right now, they're behind. They were like 11 days behind. So we had to move some closings around, because as soon as it comes back though, we know it's clear. It just gets checked off and goes straight into closing. But if they're 11 days behind by the time we, are working on this, and at any point in the process, they could decide to be behind. So we literally no control. But add 10 days to your contract, add 15 days to your contract. You know, ask us what the turn times are when you're writing the contract. Now, I will say, don't use this program until March. Does anybody know why? No? So
Distribution of the money.
that's a good answer. That's a good answer. No, they are restructuring right now. And they basically are shutting down the program for all of February. And so if you are writing a contract today for USDA, you're not closing in probably until April. Because even when they switch around the program and it's going to be bigger and better, there's going to be some glitches. So if you're going to write a USDA loan at any time, or you're going to be doing a USDA purchase, I would make sure that you prepare to close sometime late April. Or we need to choose another program. Okay? VA. All right. Steve and I are MLOPs, which are military lending outreach professionals. So we have a certification in VA. 100% financing again, so true zero down program. If you are eligible and have 100% of your eligibility, you can do more than one at a time. I just did one like this. We just looked at the COE to see if they still, you know, if they had full eligibility or not, and they did. So it worked out. There's an income calculation and a calculation done for all of that. So if I could just get some of that stuff in advance and a little time before a contract is written, I can figure that out for you. They do have to be an eligible veteran with a DD 214. They have to have a DD 214. There are gift funds allowed, which you shouldn't need because you have up to like 4% in seller paid closing costs, but there's other things that you can ask for, just so you know. So there's a lot to play with there with a 0% down. They do have a funding fee that goes into the loan amount. If it's your first time, it's lower. And I believe it's actually jumped up. It was like at 2.15%, the funding fee for first timers. I think it's almost up to 3% now for first timers. And then it was at 3.3% for consecutive use. And I think it's like 3.8% for consecutive use. If you are 70% or more disabled, the funding fee is waived. So you're exempt from it. If you are 70% or more disabled in Illinois, St. Clair and Madison and the surrounding areas, you are also exempt from property taxes if you file them with the county. We still have to count it in your DTI and your payment and all of that, unless we don't escrow for that and they pay it outright. And we can talk about that later because that's a whole nother thing. We can talk about taxes today. They don't have MIP. They do have the funding fee, but they don't have MIP. So no mortgage insurance on that. They do have to have a pest inspection, and it has to be paid by anyone else but the borrower. So Rick and I have one right now, and he said, well, can I pay for it? And I said, yeah, you sure can. As long as the borrower doesn't pay, it doesn't matter.
And I'll tell you guys, I've done that too. I've done that more than once. And it's $40. Just so you know, to get that pest inspection, typically it's $40. Yeah. That's what that termite inspector charges you.
It's a nice gesture, but you can have the seller pay for it too. They're pretty agreeable.
But here's the great part, and I'm going to add, if you have a reputable home inspector, they have a contract with termite inspection companies or wood infestation inspectors. They'll come on the day of the home inspection as part of your home inspection. And so your buyer will pay for the home inspection, but the home inspector actually pays for the pest inspection. Just so we're all clear. Because a lot of those services, I know, and I'll CDI and Madewell, I know do that. They have a or a pest inspector come with them. But when you call your home inspector, ask that question if they have a termite inspector come with them or a wood infestation, come with them as part of their program.
Inspector will probably do that.
Inspector, yeah, Benji does that too.
Mhm.
Benji's actually speaking next week.
Oh, good. Yeah, he's a veteran. So,
Yep.
like my VA borrower right now, I said, "Do you prefer to have a veteran inspector?" So that I knew to use Benji instead of. So sometimes it's just preferred.
Yep. Good dude.
Yeah. VA. Okay. So remember when I said USDA, you need to add a little extra time because it has to go to USDA? VA has their own little thing. So they have VA appraisers. You have to be a certified VA appraiser, and it has to go through a different portal because lenders are never allowed to talk to appraisers. It has to go through its own portal. They typically take their sweet time getting this done. So I would cushion my VAs for possibly 10 extra days. Now listen, it's on or before, okay? Contracts are always on or before. So if we can close early, we will. If everybody's down, we'll do it. But it's always good to cushion a few extra days, especially if it's taking a long time to get your contract signed. If it's, if you don't know that you're supposed to hand the contract over right away to the lender, let's clear that up now. We need it in our hands as soon as we can get it because we need all the time we can get. So please make sure that you're giving that contract to that lender immediately. There's no income or address. They have energy efficient mortgage options. So you can do like discounted things for energy efficient items. I already talked about property taxes, 620 or above. Sometimes it can go below, but it has to have that automated underwriting system approval, AUS. You can go above 50%, again, AUS guidelines, 4%, but there's other things that you can do on your, I have like a list of things that you can add to that 4% if needed. Most of the time, not. We do send challenge coins to veterans who close on VA loans. So that's a huge deal. And it's fun. I said that we're MLOP certified. Anything that you can think of on a VA, it's just that VA appraisal, I would add a little time. They're unpredictable and they're hard to communicate with. So, anybody? Okay. We kind of went over all this. So here's some documents that you're gonna, expect the borrower to cough up. I like to do this at qualification. I like to get my documents as soon as I possibly can, way before they write the contract. I like to figure income. I like to do all that stuff. So basically, I'm going to do an application and I'm going to, if it looks good, I'm going to email you and the borrower with a video saying, hey, everything looks great. We need to talk because we need to dot I's and cross T's, make sure I've got all the information correct in here. And here's the documentation you're going to need. So sometimes it's more than this. Divorce, all pages of divorce decree, child support documentation, all of it, all pages. All pages of your bank statement. So even if there's a page that is intentionally left blank, we need to see it. The reason why this seems so ridiculous, so the government obviously is involved and we're the most heavily regulated industry on the planet, but they think everybody is committing fraud, hiding money, anything cash, like if you have big deposits or I have a borrower right now who's like, yeah, I inherited some money, but it was cash. I'm like, get that in a bank, like right now, because it's going to take you 60 days to season that money. Like I can't even find a way to filter that in enough time. So they think cash, you're either a drug dealer, a terrorist, or a prostitute. Like they just assume the worst, and they don't know you. And I tell borrowers, I'll get some stuff from some borrowers. Why do I need this? And blah blah blah. And my famous line is, "Hey, have we ever met?" No. Oh, okay. Can I have $200,000? No. Okay, it's the same thing. So just make sure that everybody understands that the government doesn't know them. They need to check people out before they give them all this money to buy a home. Because although they own the home, they don't own the home. The bank owns the home. So just keep things super practical. And the calmer you stay, the calmer everybody else stays, the borrower and the seller. Yes, ma'am.
Question. So this particular person puts money in the safe deposit box. They don't do a savings account because it only pays 1%. So in order for them to use that money, they will have to take it out, put it in a savings account, and let it sit for at least 60 days.
Yeah, it has to be seasoned.
Okay.
Yeah, we
Okay.
have to have it documented, and we don't want to see it. So this person deposited their money in January. So I don't want to see their January statement. I'll
Okay.
need February and their March statement.
Okay.
So you have to wait until, and schedule their kind of closing and their shopping and all that until then.
Okay. Thank you.
Uh-huh. Yeah, so she's going to have to wait until like March, April. Okay. So if you're a self-employed borrower, oh my gosh, right now during COVID, yeah, I mean, I want a pint of blood, your firstborn. I mean, seriously, it's bad. So you're going to have to provide all kinds of documentation, including profit and loss statements, balance sheets, things like that. They just want to make sure nobody's affected by COVID. Social Security, any of that stuff, all of those things, they award letters and stuff like that, they'll need to provide. Sorry, put my finger on it. And here's that renovation process. Again, I'll just schedule something if Barry wants to schedule something about renovation loans. This is the 97%. Fannie and Freddie, which is that 3% down program I was telling you about. So it does have income limits. It says it doesn't, but it does. So, but it's a great program if you can use it, because the MI on it is reduced. So, and the rate is comparable. But that's really for me, but we just have low down payment programs available, whether it's FHA or it's whatever. This is a great, I think I owe Barry some sheets to upload in color, but this is going to be one of them if it hasn't been uploaded already for you. And this tells you about foreclosure. So if you're talking to somebody, make sure you're qualifying your borrowers. If they filed bankruptcy yesterday, they don't qualify. And that has actually happened to me, where an agent sent me somebody that applied. I pulled credit, I did all this stuff, and I literally got on the phone with the person who had already had a bankruptcy and told me, oh yeah, I filed bankruptcy like a week ago. So it was pointless. So you have to just make sure that these little guidelines when you're talking to people kind of stick in your head. So bankruptcy, we usually use FHA because it's only 2 years from the discharge date. So foreclosure, 3 years. Okay. If Barry doesn't have that in there, I'll make sure he gets it and he'll upload it in his little portal.
Yeah, it's not in Google Drive right now. We'll need to do that.
Okay, I owe you a bunch of
Yeah.
pages. So,
Yeah, we've got to get together over the next week or so and go over it.
okay, I'll have Alec start on that.
Why don't I shoot down to Key West real quick and we'll just
Oh yeah, I have them all with me.
yeah, there we go.
Shoot on down to Key West. We're going to Dry Tortugas tomorrow, so no worries. We also have down payment assistance programs. Most of the time, and we have the local ones too. Let's talk about this really quickly. We use IDA a lot in Illinois or MHDC in Missouri. They're the fastest and the easiest to use. Chenoa is super expensive. It's kind of my last chance grant. If I absolutely have to use it, I will. But if we do that, you're gonna have to use the full 6% in seller paid closing costs. Have to. There's no other way around it. Sorry, guys. We'll have to
Hey,
get back
Em,
to him.
now that you've opened that door, you've opened
Yeah.
Pandora's box now.
I have.
Can you talk about seller assisted closing costs? And a rule of thumb, because we're seeing that quite a bit now. We're seeing that, hey, I want to buy your house and I will pay list price, but I need some $3,000 toward closing.
Mhm.
Or I got one the other day that said, hey, have you heard of the seller paying all the closing costs? And if so, how much is that?
Mhm.
Can you kind of talk about that a little bit and what a lender runs into when you start playing those games?
Yeah, I sure can. I wish I had a loan estimate up one of these days. Maybe we can go over a loan estimate. Might be the best way to do it. So you have, there's two things that go into what people see as closing costs. But one is technically not a closing cost. It is like a buddy to the closing costs. So closing costs are the lender fee, the appraisal, and title and recording. So a lender fee, appraisal, title and recording will typically be $2,500 to $3,000 in Southern Illinois, where we are, okay? In addition to those closing costs, you have what's called prepaids. Prepaids are your year of insurance up front. They require you to pay your insurance up front, because if you don't make a claim on your home, why would you pay insurance? So they make you pay for it up front. So they collect that, and then the title company pays that at closing. So the client doesn't pay that out of their pocket at closing. It just gets put into the numbers, and then the title company pays it. So year of insurance up front, odd days interest. Odd days interest are if you close on February 15th, it takes you to the end of the month. You skip March 1st payment, and your first payment is due April 1st. Make sense? It's usually a couple $100, depending upon the house. And then the other thing that is included in that is setting up your escrow account. So they're going to cushion your escrow account with a couple of months of taxes and a couple of months of insurance. Those months go by the time of year, because taxes in Southern Illinois are due starting July 1st. But it's so 2020 taxes, 2020, are due July of 2021. Okay, the bills start coming out May, June, something like that, which will really affect the next thing that I'm going to tell you, which is the tax proration. The seller owes the borrower for the time that they lived in the home. So right now, my closing's on Friday. They are owed all of 2020 and January 1 until January 29 or whatever that date is. Wait, Friday's 25th, something, right? I don't know what day it is. 22nd of 2021. So they're owed 13 months, which will absolutely wipe out all those prepaids, probably. Typically, you're going to ask for $2,500 to $3,000.
Uh-oh, Emily froze on us. So does that make sense, what she's asking? Give her a chance to catch up.
If the veteran takes to wipe out, oh, huh?
Oh, no, I was covering because you froze real bad.
Oh, sorry. Okay. If the seller is a disabled veteran, then they don't have a tax proration. So you may want to ask for more seller paid closing costs to cover those prepaids if they truly only have their down payment to bring to the table. So it can be kind of complicated. We can help. The tax records are public knowledge. If your sellers are senior citizens and they have a freeze on there, then they're going to have reduced tax proration, things like that. We can totally help you calculate that. But on just regular deals, $2,500 to $3,000 is sufficient. Now, how do you accomplish that, especially in a seller's market? So if somebody offers full price for a house, I'm just going to use $100,000 because it's easy to do the math. If the house is $100,000 and you're like, hey, I'll give you $100,000, but I want $3,000 in seller paid closing costs. The seller is only getting $97,000. So you could say, hey, I'll give you $103,000, but I want $3,000 in seller paid closing costs. Then they net out what they were asking for, their full price offer of 100% or $100,000. Does that make sense?
But be very careful with that because it has to appraise for
It does.
that 103,000.
The one thing that I will say though is the appraiser has a copy of the contract. They know what number they're supposed to come in at. So if they really can't get to that number, there's more to it than that. So does that make sense to everyone? I mean, typically, if you're selling your house for $100,000, it's going to appraise for 103. You're not really going to have that much, it's not going to be that technical. Make sense? Okay.
At least let me see head nods. I need head nods. Does it make sense?
Okay.
I know who's paying attention that way too.
Yeah, my voice can get a little daunting. I'm sorry. Okay, moving on. I'm not going to even talk about Chenoa. IDA's awesome. Here's some additional things to know. So qualifying your borrowers. Have some really good conversations. I know that your leadership does some role play a lot of the times with borrowers. And creating conversations that ask them good questions. Like, it doesn't work that way. Buy a house. You have to be back at work actively. Are you going to pay cash or do you need financing? Good question, right? Where's that money coming from? Like, have you saved it? Did it come from an inheritance that was cash and now you need to put it in the bank and season it for 60 days? Like, you can do it the right way without sounding nosy. Have you ever filed bankruptcy? What's your credit? What's your overall credit kind of look like? Maybe that'll help me help you? Do we need credit repair? Do we need, those types of things? So have those really good conversations. Make sure you're role playing with either Barry or me or somebody, anybody, because those are really good conversations to have, because you don't need to send somebody to a lender that has a 420 credit score. And it's harder to have a 420 credit score than it is to have an 800, just so you know. The subject address. So I'm going to send you an email every time I get a contract that lists about 6 or 8 points that I need to know. So I just make sure that I have all these points correctly in my system. And if I'm wrong about something, it probably means I'm missing an amendment or something of the sort. Okay. So these are good to have. Your subject address. Don't write what's in MLS. Don't write, what the client said. Don't use that. Use USPS only for your subject address. You will save yourself a ton of time going back and getting an amendment to make sure that the subject address matches USPS. And yes, I will ask you to do that. So will everyone else. Purchase price, that's a given. Closing date, on or before. If you need to cushion it a few days because there's some extra chaos happening in your loan, whether it's borrower chaos or it's USDA has to go to USDA and they're backed up, or VA's appraiser, you just don't know when he's going to go out there. Just, hey, let's cushion this a couple days so we're not disappointed. We're setting proper expectation, and then we can always close early. Typically, there's no difference in those 10 days besides the borrower wanting to get in the house. Loan commitment, 10 days prior is reasonable. I am not going to give you loan commitment on a weekend. So look at your calendar. My staff doesn't work then, so it has to be on a weekday. A true loan commitment, I want to explain the difference between loan commitment and conditional approval and all that. Loan commitment is, it's the appraisal's been completed, it's been through underwriting, we have a conditional approval. And it's different than a clear to close. So you can't, there's a lot of Missouri agents that ask me for a loan commitment with no conditions on it. That's a clear to close. Typically, you're not going to have that 10 days before closing. It's just not going to happen. There's a lot to do on the loan. So there's still, even on a loan commitment, there's still conditions that need to be met, whether it's another pay stub or, funds to close, a bank statement, the earnest money check, we need to see something like that. And the earnest money check that you guys give me, although I need it, the one that's turned into title, they have to also grab the cleared copy from the bank, front and back, and the bank statement that goes with it. That will be an underwriter condition for every lender. So you have to wait for the title company to cash it. And then you have to have a front and back copy along with a bank statement to show it came out of your account. And hopefully that's the same account that your money is coming from to close on the same bank statement. If earnest money is done in cash, can't use it. Can't give it back to the borrower. If it's money order from cash, same thing. Money orders are a pain in the butt. Do a cashier's check if they don't carry checks. And I get it, checks are old school, but the government is old school. Go get a book of 10 checks from your bank. You might need one day. Title company. When you're filling out your contracts, please put in the title company information. the title company, the location, and if you have an agent, use that too. A lot of the times I'll get contracts and I'm like, hey, I can't order title work because I have no idea where you're closing. And that's like a big thing that my assistant needs. Seller paid closing costs. If you are not putting in a dollar amount, an exact dollar amount, put in $0, just like I have here. Don't leave it blank. That leaves room for interpretation. Earnest money, I just talked about it. I like to know when the inspections are scheduled. I try to order the appraisal to happen after inspections. Gives you a little time to decide if this is actually going to happen before I charge the borrower $500 for an appraisal. Makes sense? I don't want to hold up the deal, but I also don't want them to pay for something necessary. Once the appraisal happens, Kathy will reach out to both agents and say, hey, your appraisal came in at value without predications. We're moving forward. Or she'll say, hey, your appraisal came in $2,000 light. What do you want to do? Last year, I had one $30,000 light and one $14,000 light. Rare instances, both Missouri. Probably both, overpaying for the house, but one terminated, the other one's back in trying to get reappraised, an ROV, reconsideration of value. Predications. Predications are things that the appraiser calls out. Scrape and peel the paint off and repaint. Fix the GFI. And then he charges you another $150 to go back out and look at that. So if you can do it prior to appraisal, do that so that the borrower doesn't have to pay an extra $150 for the reinspection. Like I said, Steve and I are both military lending outreach professionals, and I am a certified divorce lending professional. I'm certified in divorce lending, which is
Hey, Em.
yeah.
Pam just raised her hand. She has a question.
Yes.
Hi,
Hi.
Hey, I really don't have a question. I just wanted to make one comment for the collective.
Yes, ma'am.
Your assistant Kathy is amazing, and you guys communicate with her well. She gets the job done, guys. She's like, I don't even know how to say it. As much as I love Steve and Emily, I adore Kathy. She's amazing, and I wanted to give her kudos for that to the group because they need to know that she's amazing.
Thank you. I 1000%. She's down here with us in Key West. I don't know if you knew that.
I didn't know that, but
Yeah,
good for her. I'm glad for her.
We have been having a blast with her. She is so good. She is meticulous. She communicates well. She's like, again, she's awesome. You're right.
Like to tell people so that they reach out, and say, hey, Kathy, do you need anything? Do you need any help? Can I get something for you? It really helps her out a lot too.
Yes, it does, especially when we're having difficulty with a borrower, communicating with us or something like that. Sometimes it's nice to just have that backup. It's really nice. And I 1000% agree with you. I think our assistant Kathy, she makes our world go round for sure. So if you guys ever need anything, and that is very important for you guys to know that there's in-house ops helping your lender, because your lender isn't doing all those jobs. They're not. They are qualifying the borrowers, selling them on the program, and matching their financial goals with what they qualify for, and they are collecting initial documents. After that, ops does everything else. They do what Pam does. Okay, contract to close. That's ops. I basically see you at closing. If you get a phone call from me, it's because something's wrong. It's because we need to address something. So otherwise, Kathy communicates with the borrower at all times and the agents. So, and then again, so I'm like one of maybe 2 or 3 within 500 miles of the certified divorce lending. This is my information. Steve's is, I can give you Steve's too. I don't know why they don't have Steve's on here, but it's typically you're probably going to go through me anyway. So he doesn't do anything with technology. Nothing.
Don't call
He's old
Steve.
school.
Don't call Steve. I hope he's not back in the room.
He's not, but he is.
Definitely not pretty.
Huh?
Definitely not pretty with technology.
He I will tell you though, with his 26 years of experience, and he's very funny. I'm constantly entertained, but he knows how to structure things in ways that I don't always know. So a lot of the times if I'm running into an issue or I'm having trouble with something, Kathy and Steve and I will sit down and talk about it and see if there's a way out of the roadblock. And 9 times out of 10, he's come up with the solution to get us out of the roadblock.
And one of the things that's really nice about your team, Emily, that I find, and I've known you for years, I don't know if anybody knows that we've known each other forever today. And
Yes,
I know you, Steve, and Kathy go the extra mile. You go out of your way to make things happen. And if nobody has said thank you, I'm saying thank you from me. And just guys, collective, keep that in mind when you're, looking at lenders. And Emily and Steve will always take over a file if needs be too.
Yeah, we will. So just so you know, Steve and I are 100% commission, just like you guys. So we do not get paid unless this thing closes. So we all need to be a team together. We don't need to be working against each other. We need to be working with each other and helping each other out and promoting each other to the clients, because that is how we get paid. And the customer experience is worth more than anything any paycheck will ever give you, because that customer experience will help you keep getting paid and keep getting referrals, which is so much easier getting referrals than it is trying to find random stranger clients. It really is. Our business runs on referrals. I mean, we're 70% referral right now with our business. It's significant. So, and then, with that, we get to, share in that as well. So, any questions? I mean, I appreciate everything that you said, Pam. That was awfully nice of you. And Barry, thank you. I know that we've been working together for you guys to let them know what we do, but anybody who wants to go ahead and reach out and schedule an appointment, I will do whatever I need to do to help you come up with a customized marketing plan or explain a program or help you qualify a borrower or whatever you need to do. And so will Steve, so will Kathy.
I'm going to throw a homework assignment at everybody in the PC program. I want you to schedule an appointment with Emily. And it's a phone call. Shoot her a phone, call her in Key West.
Text me.
Or text her or shoot her an email.
Excuse me. I'm sorry, Em, but I need to have an in-person thing. Can you shoot me an airplane ticket? I'll be right there.
Yeah. No worries. Yeah.
But
we're
seriously,
Saturday, guys. I promise we'll be back in the office next week.
Yeah. So next week, seriously, I want everybody to call Emily. Because in order for you to use some of her marketing tools, you really need to have a one-on-one and a good understanding of what her and Steve do, and what USA Mortgage is. And then she will hook you up with list reports and total market expert and all the things that you need to be super, super successful. And remember, I've told you guys, hook up with 2 or 3 lenders. Well, this is a slam dunk, right? Because she's in the office and she's online and she's here. And Emily knows that I tell everybody to get a hold of 2 or 3 different lenders because they're lenders for specific purposes. Emily can't loan on everything that's out there. And there are other lenders that will serve those purposes. There is a network of lenders. And if you have questions like, hey, I have a mobile home on 5 acres that I'm going to try to buy, or somebody's going to try to buy, Emily doesn't necessarily loan on mobile homes.
I do, but I want to see some papers first.
Yeah. So
Mhm.
if she can't help you, she knows someone else who's a lender who can.
I do.
Um, and so I throw that to you. And if you have somebody with a credit issue that needs to get into credit counseling, she has a network that she can plug clients into to help improve their credit. There's just reaching out to her is the first step in understanding the lending world. And she gives you, I mean, obviously that marketing. I'm going to tell you guys, every open house I do has Steve and Emily Flowers information all over it.
And do you need my permission every single time you use that?
Nope,
No,
nope.
just do it.
Yeah, I go in and I do my sign-in sheets and I do my. You guys see the website that I built for every house I do an open house on. It's right off List Reports, which is one of Emily's products.
Mhm.
So you got to have a meeting with her and call her Sunday because she'll be back
Yeah.
and set up an appointment. Shoot her an email, do something.
Yeah.
She can either do it virtually. She's actually had people come to her house,
Yes.
or she'll meet you in the office. So get that done, whether you're Illinois or Missouri,
Mhm.
and get your network built.
Yep.
Matter of fact, Steve and Emily are headed with me shortly to Mount Vernon, Illinois, here in the next 30 minutes because, yeah, I'm leaving in 30 minutes and I'm taking Steve and Emily's products with me.
Yep.
Because they'll cover it all the way out there.
Yep, we have little loan booklets. We have all kinds of stuff. Actually, in the shared drive is our journey to home ownership.
Yep. I put it on the Google Drive and I hand that out. And you guys, I mean, there's some hard copies up in the office that I will, at some point, these will be distributed to you when we can all be together again.
Yeah.
And there's all kinds of info for you. Emily gave it to me and said, here, make sure these guys get it. Unfortunately, there's not been an opportunity for everybody to be in and out of the office. So anyway, take
Well,
time.
we used that journey to home ownership presentation because it's also in a like a format like I'm showing you right now. And we did Charlon Loving. I did a first time home buyer just virtually.
Yeah, you want to talk about that because that's another opportunity to utilize Emily's services.
Oh yeah, that was super fun. She got her own credit repair person. She was pretty sharp, and just invited people, and we just did this little Brady Bunch style thing right here. And she presented, but the booklet takes you through the process. So she introduced the credit repair person. The credit repair person talked and did her presentation, and then Charlon guided everybody through the presentation that I had. And I spoke when it was appropriate to speak about lending. And then she took over and said, oh, okay, well, then this is the part where you shop. And then here's where Emily comes back in. And then here's where we close. And here's what we do. And it was simple and to the point and, easy, super easy to throw together, invites and everything. So.
Yep.
And you can do the invites through us as well on Total Expert, and they'll do social media copies for you, all kinds of stuff. So. Any questions? So, okay. I mean, Barry, there's a million things we could do. Like someday we could go over like an LE or a CD or the differences between the LE and the CD. Because I do have made up copies of those. We could even go into a little bit of the divorce lending side and the differences when you're working with divorcing clients and staying neutral and doing those things. I mean, we could do whatever you want.
Okay. Yeah, guys, this is a free form conversation now. If you have questions, it's a great time to bring them up. If you have specific questions, right now is a great time to bring them up. Our next presenter will be on. We probably got about 15 minutes left. So yeah, if this is a chance for you to talk to Em.
Yep. If you want to. If we have 15 minutes.
About 15.
Okay. Can you see my screen still? Did it change?
No. You'll have to unshare, reshare.
Okay. Stop share. I'm going to show you list reports.
Look here, guys.
May as well, right?
Absolutely.
Okay. Here's list reports. Couple things about list reports is, do you guys struggle with something to share on your social media every day? List report has something for you to share
Yep.
every day. Every day. It's awesome. So they even provide verbiage for you. You know, little things. There's a really successful agent that I know that shares this on LinkedIn every day. They give you verbiage, and then you can easily share it on Facebook, or you can download it and share it to LinkedIn and other things. You can even use one thing for Instagram that I always use. It's repost.
Yep.
Yeah, repost is what I use. So that's one thing that they provide. And then let's go into a marketing kit. We'll use Ginger.
That's my bald head at the bottom.
Yeah. Oh, yeah. We used you. So every time you create, okay. So if we're partnered together on list reports, all of your listings will automatically be created for you. You don't have to do anything. If it's not your listing and you want to make a kit for an open house you're going to sit at for Barry or somebody, then you can go in and make these for yourself. And they take how long, Barry? 2 minutes?
2 minutes.
Maybe.
It literally takes 2 minutes because the system creates it.
Yeah, it's really cool. So every time you make these are all the things that you get. So you get a website, you get property flyers, you get sign-in sheets, you get a property report, and I'm going to show you some of these. And they even have pre-listing presentations. So if you're wanting to go after a listing, you can make it, even though it's not an active property, and it'll still make a pre-listing presentation for you. So it's something really pretty that you can take with you and have in your hot little hands to show what kind of marketing you're going to do. Here are the websites. And if you've ever seen Barry's social media, you'll see these all over. So this will always be your property in the background. It'll give you a little information. Pretty easy to share on Facebook, yes. And then it'll say about the home. It'll give you some details. The whole photo gallery. Explore the area, which I want to show you in a different way because it's really cool. It has a payment calculator, easy to use. And then meet your agent. There's Ginger, all about her. And then meet your loan officer. And that's us. So that, okay, list reports. So I'm gonna just show you a flyer. Oh, this one isn't even in Keller Williams red. She doesn't have it set up. Barry's would be in Keller
Yeah, I
Williams
did it.
red.
Matter of fact, I did an open house if you want to pop that one.
Oh, you did. Okay. Yeah, I want to get out of here then. Yeah, I want to get out of here and do yours.
And I only say that because it was actually one of Angie Deskey's open houses. We did it last Sunday, and I built one. And I built one yesterday.
Oh, you did? Okay, cool.
Yeah, it's like there's the prick
All
one.
right,
We're actually
here
doing
it-
that one this Sunday.
Okay. So you just have to update it,
No, this one's already published, ready to go.
the information. Oh, this one's ready to go. All right. Passed it up. Open house flyer, here we go. Ah, there we go. Okay, a little bit of information on the house, the price. There are flyers that don't have a price on them too, that you can choose, and you can put those out front in like sign boxes and stuff, or flyer boxes. Open house, you can actually put the date and time here. You can add different pictures. So you'll choose, if you're making it yourself, you'll choose the pictures. So you might have like a kitchen and then like a living room with a fireplace or a pool in the backyard or a game room or something interesting. It'll have your information as much as you put into your profile and hours. And then the back side, they're all double-sided, has all of this cool information. So what's convenient, what's within 1 mile of the home, the schools and their ratings, you can take that out too, or you can just take out the ratings. The parks, and then neighborhood eats. There's 34 restaurants within 5 miles. And then it breaks them down by category. So pretty useful information for people. All the list reports, they're gonna look pretty much the same. So it's not gonna sell the house, but it's gonna give you something to, send with people and use. So it does, having them look uniform is good. But that information on the back is money. That thing's awesome. You can even make some of these and leave them at the house. These are little property reports. So you just staple them together like a little booklet, and it gives you all the pictures and more information about the house. Oh, and that stuff too. So I usually print a couple of those and leave them at the houses. I like that. And then remember that pre-listing presentation that we talked about? It's right here. Look familiar? So this is a little booklet you can give to your seller. Say, oh, this is one of the things I'm gonna do.
It's funny you say that because that's actually what I'm printing right now.
Are you?
Yeah.
It's useful, little tools. And the minute you start putting in the information, if you wait 2 minutes, I'd be surprised for all of those things to pop up. So every time you make a list report, all of this stuff is included in every single one, as long as it's an active listing. So, and it's made in 2 minutes or less. So you can kind of do it on the fly. You can print it at home. You can print it from anywhere. Don't order from this site though. This is not us printing it in St. Louis. There's another tool I can show you that does that. But anyway, you'll learn this in 5 minutes. It's super easy to use, user friendly. So, and all I got to do is get your email address and some information from you and invite you. So that's part of what our meeting does. Anybody have any questions? I threw a lot of information at you guys today, a lot. And I probably could have gone into even more detail. So.
Yeah. And guys, I know that she did throw a lot at you. And I know that if you take 10% of what she said, you're going to be successful. And really spending time with Emily, meeting with her, talking to her, is going to pay huge dividends for you long term.
And
she does
and
not want you to fail.
I don't. I know that the lending part is not your job, but if you know enough to be dangerous, it's a good thing.
Hey,
Because, hmm?
Brandy, just to ask a question. You went
Sure.
over buyer closing costs. What would you give as a number
Yeah.
for the seller for their closing costs?
Oh, wow, theirs is a lot different. Because they owe that tax proration. So their title fees are going to be the same. They won't pay lenders fees. And I'm just talking Southern Illinois right now. I'm not talking about Missouri. They have to pay the owner's title policy. So that's one of the prepaid items that I didn't mention because it does go on the seller side. It shows up on the buyer side at the beginning and then gets taken off.
Hey, Brandy, I can add to that too.
Mhm.
We have the title company coming in next. We have Lisa Joe from Abstracts.
Oh, okay. Yeah.
And that she'll be able to, when she goes through that settlement sheet with you guys in about 20 minutes, 30 minutes, I bet that's going to be a pretty good idea for you right then.
Yeah, that she's going to be more helpful than I am because I don't look at the seller's side of the transaction at all. It's none of my business basically. So, because the borrower is my client, and because you are my client as well. So the borrower's agent, yep, the borrower's agent and the borrower are my clients. So sometimes I get a lot of like seller, like I'll communicate a little bit with the seller's agent, but sometimes they'll start taking over a little bit, and I truly, they are not my client. I don't really owe them any information. So, that part gets a little delicate. And I don't look at their side. I could probably look at their side of the transaction. The title company provides that when they're working with the closer, but I don't look at that side of the transaction. So the title company will help. Anything else? Barry, can you think of anything that might be important that I need to cover?
No, it's situational. I mean, I think you covered
It is.
a lot of stuff. And when you start talking about loans and you start talking about types of loans and all that kind of stuff,
I know.
it gets crazy. Pam, do you think of anything?
Yeah, Pam would be good. She's amazing. She comes up with some stuff with like Pam when she does the transaction coordinator position, and she'll outline all the stuff that I needed to know along with the contract. So she'll send me the contract plus the like, hey, loan commitment might not be on here, but this is kind of when we're expecting it. The title company information, the things like that. She really takes care of a lot of details. So, yeah, she's amazing. So I don't think she's on here right now, which is
I am. Thank you.
She might be.
I just jumped right and grabbed your cup of coffee, but thank you, Emily.
Oh, you're welcome. Yeah, she takes care of a lot of details, and it's really helpful for the lender to have that.
Yeah. All right, folks, I want to thank you, and I want to thank Emily specifically for coming, taking a couple of hours out of her vacation, and speaking to us today. And what we're going to do now is we're going to take about a 15-minute break. I'm going to stop the recording, and then we will start the recording at 11, and we'll take it from there.
Thank you so much. Have a good day. Just